Are stocks headed lower as a downtrend could be starting to form? Stay tuned to the end because I have a shocking conspiracy theory about the jobs report that will be released on Friday. On Friday, we saw the S&P 500 closing near the session highs. When we come over and look at how the indices fared across the board, every single index was in the green. When we look at advancing issues versus declining, we had 63.1% of issues advancing on the day. Now, when we come over and look at the sectors, on Friday, every single sector was in the green. However, pay attention to the leader out there, utilities. That can be seen as a defensive play. And then as we scroll down here and we look at the 1 week performance, notice both energy and utilities were the big leaders out there. The laggard out there was communication services. Now, something we want to pay attention to when we come over and we look at energy. We can see crude oil on Friday basically spiking the swing point right over here, forming a shooting star candle. But what we do not want to see, we do not want to see crude oil continue to rally up. Why? Because that could put inflation pressure on the market, and that could douse some of the rate cut hopes. Right now, the market is pricing in an 87.7% chance that Jay Powell will be cutting rates at the next FOMC meeting. Now, we come over and do a quick sentiment check. We can see the fear and greed index is back into neutral territory. Question is it about to swing over to fear, or can the bulls defend this area and we go right back over into greed? We come over and look at the most recent investor sentiment survey. We can see the bullishness stayed exactly the same, 41.7. However, the bears did drop off a little bit from 42.4 down to 39.2. Now, we come over and look at the SPY real quick. Notice the SPY came right down, testing out this prior support area, also which correlated with the 38% retracement. Now, we had that gap down on Thursday. Friday, we came right back up, but is this about to produce a lower high? Because when we look at some of the data that we had out here this week, for instance, on Thursday, we had the final GDP numbers come in much, much better. 3.8 versus a forecast of 3.3, previous reading 3.3. Also, look at the weekly unemployment claims dropping down to 218,000, which is very interesting given what we have setting up with the conspiracy theory for Friday. Then we had core durable good orders come in better than expected, 0.4 versus minus 0.1. And even the durable good orders, 2.9. Now, if we scroll down real quick, even the existing home sales came in better than forecast, 4 million versus 3.96 million. Then when we couple that, when we look over here at the daily chart, notice the context of the trend is still intact at this moment. We have not violated a significant low at this point. However, could that be about to change? When we come over and look at the volatility index on Friday, the VIX was down 8.61%. I was hoping it would be down at least 10% because the rule behind that would be either Monday or Tuesday would likely be a down day in the market. And then we'll see if this support will be able to hold or if we're going to start breaking and start making new lower lows. Now, here's a little bit of data that actually came in mixed. On Friday, we had the PCE data and it shows inflation is rising again, but not enough to alarm the Fed. The market's still priced in the Fed will be cutting rates at the next FOMC. Now, here's one for the bears out here. CarMax stock plummets 20% following a challenging quarter. Now, if we look at CarMax real quick, that is nasty. Now, what makes this even worse, when we scroll this chart out here just a bit, we can see this isn't like CarMax is just coming off the cliff from the very top, all the way up here from the high, down here to the low that we saw this week. That's a 72% drop from the high down towards the low. Will we see the broader indices start to follow in the not too distant future? Because let's not forget, it wasn't too long ago, a week or two ago, we saw the collapse of a subprime lender, Tricolor, which caused a little bit of panic out there. But what if this is not contained? What if the subprime car loans ends up being a domino effect out here in the stock market? Well, I got to warn you guys, they told us back in 08, 09 that everything was contained. Last week, I shared with you guys this stat that showed that there was a 63% chance the market would be down. Every time we had the parameters for this stat, we are only up 8 times, down 22 times. And when we look at that weekly candle on the SPY, it just barely met that criteria. We kind of have more of a doji candle, wick on the top, wick on the bottom of the candle. But when we look at the MACD indicator on the weekly chart, at this moment, the MACD indicator is still looking extremely strong. However, we do got to be mindful that we are quite elevated above the zero line, at least at this moment. Then I have another bearish stat to share with you guys as well. Whenever the market's been up 10% or more and we had a positive September, notice the stats right here for October. We have only been up 9 times, down 11 times, and this stat is going back 50 years in time. However, a stat is just a stat, but what happens when it lines up with a potential government shutdown? We see right here, Trump to meet with top congressional leaders as a government shutdown looms. Now, the shutdown would occur at the end of Tuesday. And if the government does shut down, who do you guys think is responsible, the Democrats or the Republicans? Let me know your thoughts in the comment section down below. So the closer we get towards that government shutdown, could that lead to more uncertainty in the market? In the market confirming that doji candle and starting to push down lower and trying to come up and tag some of these high volume nodes over here on the volume profile. Now, Friday is going to be a very important day out there because we have the average hourly earnings. We have the non-farm employment change. We have the unemployment rate, and this is where the conspiracy comes into play. However, something that's not a conspiracy out there is the fact that Take Profit Trader is 40% off, 0 activation fee. Take advantage of this offer. Use the link in the description box down below. Use code epitome at checkout. Now, before we look at who would benefit from the conspiracy, if it is indeed going to pan out, the bulls or the bears, let's take a look at some of the charts. For instance, look at the Dow Jones chart on the top. Look at the transportation index chart on the bottom. As the Dow Jones was able to squeak out another new all-time high this week, look at the transportation index. Once again, unable to take out a swing point. We still have divergence playing out on this chart. Then we come over and look at the 10-year versus the 2-year yield. If we see this starting to steepen, watch out. That is also going to be problematic. But if we see this chart starting to go down, that could actually favor the bulls out here just a bit. Then we come over and look at HYG versus SPY. And this chart right here is kind of neutral. We see the SPY starting to go up towards the end of the week, HYG going up. We saw the SPY going down, HYG was also going down. And as the SPY was able to make a new all-time high, HYG was still pushing new all-time highs. So I'm going to go ahead and put this in the neutral category. Now we come over and look at the SPY real quick on the weekly chart. Notice we do have that doji candle. MACD indicator is still strong at this moment. But I do want you guys to focus on some of these high volume nodes on the profile. 644.67, 635.91, 623.89. And then down here, 603.61. And even down here towards 590.35. Keep in mind, there's a lot of gaps that still have not been filled. And you can see this large weekly gap way down here. Now, as we come over and look at the daily chart, we talked about we've already tested the 38% retracement. Now, quite often we'll see the SPY go down to the 50 or even 61.8 Fibonacci levels. We look down here, the MACD indicator does have a bearish cross at this moment. But what if the government does indeed shut down? Well, here's what happened the last time we had a government shutdown. The market was actually free falling before the government shutdown, and that also coincided with Trump's first term. We had a 30-something day government shutdown. Now, this is going to be important, and more specifically, pay attention to this area of the chart right over here, as that could give us clues to what could happen if this conspiracy comes true. Now, as we come over and look at the 4-hour chart, MACD indicator still has a bearish cross, still trying to work its way down towards the 0 line. Also, pay attention to the minus development area on this chart, and that's really going to be anywhere from 655.69 down here to about 649.93. Think about it, minus development area is nothing more than inefficiency in the market. You may wonder, how did I come up with that area? Well, if you look right over here on the volume profile, we can see this is the area that has the least amount of volume. We know that because the more volume that's traded at a specific price point, the further to the left, the histogram will protrude outwards. Now, when we come over and look at the 30-minute chart, notice we're able to get all the way back up above the 0 line. We're able to fill that gap from Thursday, but then we basically consolidated here just a bit. Now, the question is this cause being built to go higher, or is it cause being built to go ahead and take another leg lower in this market? Well, let's come over and look at the futures markets real quick and try to formulate a game plan. We look at the weekly volume profile levels. We have value area low down here at 66.54 and a quarter. We close near the point of control at 66.93 and a quarter, and then value area high 67.21.25. Well, notice these minus development areas within the weekly profile. These are going to be high probability targets once the market starts to break in that direction. So right above us, we have one at 6,700.50. And then we have a little zone down here that I really want to map out anywhere from about 66.80 down here to 66.73. If we start breaking lower, this would be the first area. Then we can pick off some of these high volume nodes. And if we break value low, I look for a retest of the candle bodies over here on the 4-hour chart, 66.36. And let's not forget, we still have an untested point of control below us. And we have an untested value area high going back a few weeks at 66.05. Now, as we come over, look at the daily profiles on the 30-minute chart. Notice on Friday, we had that big push up. Bam, they slammed it down only to bring it right back up, closing near the upper end of the range. Now, look at this part of the profile right up in here. If we can start breaking below this area, really below 66.86, then I think we have a good shot of coming all the way back down towards value area low, maybe even challenging the lows on Friday. And then below that, back down towards these candle bodies at about 66.37. Then we'll see if we can start trying to target some of these even lower levels like the FOMC low, 66.10, and then that untested value area high at 66.05. Now, we come over and look at the QQQs real quick on the weekly chart. Notice we also have a doji-ish looking candle. Wick on the top as we made a new all-time high, wick on the bottom. But one of the areas I'm really watching is going to be about 544.18. This minus development area. If we can get through it, then it's highly probable we're going to come down towards 530.13 or maybe even all the way down here to 521. Now, if we notice right up here from all-time high down towards that first high volume spike, that would be about 12% in the market. And even if we did drop down there in the market turn, that would do nothing really in terms of destroying the overall uptrend, because if we were to pull a Fibonacci retracement from the low all the way up here to the swing high, notice the 38% retracement is right in between both of those high volume nodes. Then we come over, look at the daily chart real quick. Notice this week, unlike the S&P, where you came back and we retested the wick from the 17th, the Qs never made it down towards that area. The Qs never made it all the way down to the 38% retracement. And then it started to get the move back up, filling the gap that was left behind from Thursday. But notice right around the 50% fib level off the daily chart also correlates with a high volume node at about 580.04. MACD indicator on the daily chart is just about to cross to the downside, or is it going to kiss and go ahead and turn right back up? On the 4-hour chart, we can see the MACD indicator is crossed to the downside. And something we want to do is I want to go ahead and pull a fib from the high right down here towards the low. So far, we've retraced back up about 50%. And it wouldn't be uncommon to see a 61.8 Fibonacci retracement. But if we really start breaking the 786 at 599.82, then I expect the Qs to make a run to all-time highs. But if this week we start to turn anywhere from the current point up here towards the 786, that could set up some type of ABC pattern on the way down. And if I were to go ahead and draw that out, then here would be the A to B leg. And let's just say we stop at the 61.8. That would give us a price completion down here at 582.71. And that would be enough to break that swing low right over here that was left behind on the 17th. Now, as we come over and look at the 30-minute chart, the MACD indicator, at least at this moment, still looks extremely strong. And then notice we had that upper level consolidation on Friday. So is this cause being built to go up or start to work its way back down? One of the areas I do like for a move back down towards would be 594.04, this low volume node on the profile, aka minus development area. And quite often they will come back and get tested. So if we really start trading below the point of control, this would be an area I most certainly would want to focus on. Then a retest of the lows from Friday, and then we'll see if we can go down towards the lows on Thursday, and then start setting up that potential ABC pattern on the way down off the daily chart. Now, when we come over real quick and we take a look at the NASDAQ futures, notice we have a lot of peaks out here on the weekly profile. 1, 2, 3, 4, 5 different distribution areas on this profile that we could use for potential targets. Now, notice we also have this minus development area just above us at about 24,762. We look at the volume profile levels, 24,853 will be value area high. The point of control will be down here about 24,622, and value area low will be 24,511 and a half. So in the event that we come all the way up and we break value area high and we come back down, I would then not want to use the point of control as target number 1. Instead, I'd want to use that high volume node at about 727, then the point of control, then value area low, then the lows from last week. Then we had that untested value area high down here, 24,018. And then just below that, we have an untested point of control at 24,073. Then we come over and look at the daily profiles real quick. Notice as we scroll this out, we have a point of control above us at 24,948 and a half, which has not been tested. Then we look right down below us, and we also have an untested point of control at 24,410.5. We're kind of sandwiched right in between those point of controls. And then as we look on Friday, we left the point of control behind at 24,603. And we were able to close above value area high at 24,694.75. So anytime we close outside of value, we expect the next 1 to 2 sessions, since we're dealing with a daily volume profile, a session would be defined as 1 day in time. So either Monday or Tuesday, we come back and test that level. And if we break that area, then I would want to look to target the point of control, value area low, kind of these candle bodies right over here at about 24,519. Then the next candle bodies, 24,456. Then that untested point of control at 24,410. Anything below that price point, I would want to refer back over to the weekly volume profile charts. So what happens when the government shuts down? I went ahead and asked ChatGPT during this shutdown right here, did we have an NFP report? We did. We had one right here on the 4th. And if we look on the 4th, we added 312,000 jobs, and they forecasted 179. So you can see we still had a pretty healthy labor market at that point in time. However, we compare that to what we have going on right now. We had 73,000, we had 22,000. We can see the numbers are starting to decline. Now, what ChatGPT said was the BLS is part of the Department of Labor and the Department of Commerce. At the time, their funding had been approved in earlier appropriation bills, so they were not directly affected by the shutdown. So then I went ahead and asked, okay, what about this time around? Will the BLS be affected by a government shutdown? Here's what ChatGPT had to say. This time around, 2025, funding for the DOL and DOC has not been extended yet. That means if there's a shutdown, most of their operations, including the Bureau of Labor Statistics and the Census Bureau statistical work, would be suspended. Wouldn't that be ironic that as the labor market is getting weaker and weaker, that a government shutdown could actually shield us from seeing how bad the jobs numbers actually are?